Hi guys, Chris from Adaptation here, and today I'm going to be showing you how to do some past paper solutions for expense and revenue accounts. Alright, so before you go any further, if you are unfamiliar or you're not very good at doing expense accounts or revenue accounts, I have two videos, one for each of those topics, and I'm going to put a card here, and another second I'm going to put another card here. Or you know what, just check in the description below and you will see links to those videos. Okay, so like I said, before you go ahead with this video, if you really want to know how to do these accounts rather than just get the answers for these things, you need to take a look at those videos first and then come back here. This video isn't going anywhere. Okay, all right, so without further ado, let's get into it. Okay, so the first question I'm going to do, oh, by the way, all of these questions are available at the CXE store, cxe.org. I will also put a link for, that particular site in the description below. So please feel free to go there and buy a subscription. You can buy for 1 month, you can buy for a few months, you can buy for a couple of years, and you have as many past papers as your heart can desire. Okay? All right, so the first past paper, now I put these in reverse chronological order. Now what that means is that it's going to start from the most recent question and go backwards. Now that is as of today's date, which is April the 18th, 2019. So the May 2019 exam hasn't come out yet. We're actually less than 4 weeks away from that. So if anybody's sitting that exam, good luck. And if anybody's sitting any exam thereafter, good luck to you too. Okay? All right. So this is the 2018 January question. So just over a year old. And let's take a look and see what's going here. What's going on here, right? The following is a summary of Sweet Serve's bank account for the year ended 31st December 2017. So bank account, so regular debit balance, we have sales, okay, money coming in, rent received, money coming in again. Drawings, but drawings is when we take out money. If we take money out of the bank is going to decrease. And to decrease an asset, you actually have to credit the asset account. So I think this is on the wrong side. Unless, of course, there was a reversal of entries, but I don't think anything else in the question is telling us that there was such a transaction. Let's check the credit side. Purchases as a payment, insurance, payment again, sundry expenses, payment. Okay, so all these things are good. Now, the balance is carried down from this side, the debit side, and brought down on the debit side. Now, something's wrong here. So what you can see here is that this question definitely has an error. All right, these two things, drawings, right, drawings and the balance, both of these things are supposed to be on the credit side. Okay, if we add up everything here, 20 and 220 is 240, 240 and 24 is 264, that's the total. If we add up this side, 120 and 45 is 165, 165 and 60 is 225. So if we put the 15 across here, 225 and 15 is 240, and if we add the 24, we get 264. So clearly there was some sort of oversight when this paper was released, and these items are supposed to be across here. All right, I would think that they would have a process or an errata sheet. Maybe there was. I got this question paper after the exam, so maybe they really did release an errata sheet. I don't want to unnecessarily criticize the institution for doing something when they may have taken steps to mitigate that particular issue. All right, anyhow, so let's get into the question. What is the question asking us to do? So once again, I know it's very basic, but a lot of times I realize students don't do this step. They don't read the question, and you need to read the question. All right, so the following additional information is also available. So note your dates: 31/12/2016. That's the 31st of December 2016, and the next date is the 31st of December 2017. So in the context of this information, this is the opening balance, or this is the column for any opening balances rather, and this is the column for any closing balances, or balances at end. All right, we have rent revenue outstanding at start and at end, insurance expense owing at start and at end. So both of these are accrued items. One is an accrued revenue, the other is an accrued expense. And that has implications for how we classify those things, because they will both be classified differently. Revenue outstanding or accrued revenue is money owing to us for a service we have provided in the past, which means somebody owes us money, therefore we classify that as an asset. And that means we're going to bring it down on the debit side of the account. Insurance expense owing or accrued insurance expense is a current liability. Why? Because if it's accrued and it's an accrued expense, it's an expense we have not paid, but we were supposed to pay it. which means we owe somebody some money. And anytime you owe anybody money, what do you call that? That's a liability. Okay, so using the T account format, prepare the following accounts for SweetServe for the year ending December 31st, 2017, using the T account format. So, well, I'm guessing they meant for you to draw up your own T account as opposed to them giving you T accounts to write up. Okay, so let's do the rent revenue account. So we're coming across on the right-hand side here. Okay, so first things first, do we have an opening balance? Rent revenue outstanding at start. So we said rent revenue outstanding and accrued revenue is a current asset that's going to have a debit balance. That's going to be $2,000. All right. Next, we have a closing balance. It's also outstanding at end. So if it's outstanding at end, it's going to be brought down on the debit side. And to be brought down on the debit side, you have to be first carried down from the credit side. Okay, so we've put in the, sorry, that's not the correct item. So once again, pay attention to what you're doing, right? $1,000 here, 1,000, whoops, 1,000 here, okay? Next, we have, do we have any items in the bank account related to rent? Here we go, rent received 24,000. So if it's on the debit side here, guess what side of the rent revenue account is going to be on? The opposite side, which is the credit side. Cash book, that's going to be $24,000. Right? Anybody who saw my video on preparing revenue accounts, I actually did a rent revenue account where the revenue was $24,000, right? Sorry, the rent earned. Now, what's missing here is that figure, the income statement figure, the rent that we earned. Now, how do we do that? So first of all, let's total both sides. So 2,000 on the debit side, 25,000 on the credit side, which means therefore, for this account to be in balance, we have to put in 23,000. Okay, all right. So that's the revenue account done. Let's see what else they want us to do. The insurance expense account. Okay, so let's go back up here. Insurance expense owing. So we said any expenses owing or accrued expenses. So that's going to be a current liability, which will have a balance brought down on the credit side. That's going to be 1,500. It's still owing at end, which means it's going to be brought down on the credit side again. 700. Remember, all right, watch your numbers. To be brought down on the credit side, you have to be carried down from the debit side. The amount paid in respect of insurance is $45,000. Now, that payment is on the credit side of the bank account. And what does that mean about the side of the expense account that we're going to find it? It's going to be on the opposite side, which means it's going to be on the debit side. So that's $45,000. All right, now let's take a look and see, well, this account is clearly not in balance. We have $45,700 and $1,500 here. What's missing from here is the income statement item, right? So if we do some quick maths, right, that's going to be $44,200. Am I right? Yep, 45.7, there you go. Okay, and that's how we answer this question, right? Now, I know you guys are seeing some extracts down here. I'm going to do them just for the sake of completion, right? Right? So rent revenue, all right, and that is the income statement figure here, 23,000, right? And expenses, we have insurance, right? And that was how much? That was 44,200, right? Balance sheet extracts. So first thing is current assets for, we have accrued revenue. That's how much? That's the balance in the rent revenue account here. That's $1,000, right? And we also have current liabilities. We have accrued expenses, and that's 700. Okay, all right. And that is how we answer this question. The extracts were a bit extra, right? Because the question did not ask for them. But I wanted to show you guys how to do them for the sake of completion in case a question has asked you to do that. All right. Okay, so let's go on to another question. So if you need to pause this video, if you're trying the same paper, you can just take a look at these solutions here. But I'm going to clear it off now. Okay, so let's take a look at the next question. This is Gaga Melboy. All right, somebody was a fan of Smurfs, so maybe Buju Banton, I don't know. All right, so Jan 2016. All right, so we notice a bit of a trend here. It's like every other year, but not in May. I don't know. So by the way, don't try to predict past paper questions. I honestly don't believe that it could accurately be done, with the possible exception of partnerships. Partnerships come in almost in every paper, both May and January. So that's the only one I would say that might come with any degree of certainty. Everything else after that is just very variable, right? I actually have an Excel spreadsheet that I use to record all of the questions that come every year, and that's the only trend I've noticed. Anyhow, Gargamel. So once again, let's start by reading the question. Gargamel Company maintains separate ledger accounts for rent expenses and commission revenue. Okay. During the year ended 31st December 2015, Gargamel Company recorded the following information. So just a quick note, you guys are noticing they've given you T accounts to use this time, and they've given you a date column. I don't have date columns in my spreadsheet because I did have them, and I found that when I did include them, most times they weren't used, and when they were, the important things in the middle here and the figures were a bit small, especially if you're watching on your phone. So I have opted not to have date columns, but they are important. If they give you the information, please use it. Okay, you don't want to run the risk of losing out on marks that you can get very easily. Okay, all right. So January 1st, 2015 rent prepaid. June 30th, 2015 rent paid. November 30th, 2015 rent paid. Okay, so we have two sets of payments of rent of 5,000 each. That's a total of 10,000. All right, we were supposed to pay 12,000. So just a bit of analysis. We paid 10,000 in total plus a 600 in advance. So we've paid a total of 10,006 towards rent for the current year. However, the rent expense is 12,000. So have we paid enough? Nope, I don't think so. We're short by, what is that? 10,006, 12,000. That's what, 1,400? Let's take a look. Okay, so using the form below, prepare the rent expense. Okay, so cool. So rent expense prepaid. A prepaid expense is a current asset. What now? Oops. Why is that? If we make a payment in advance, we are owed either a refund or the service. Anytime anyone owes us something, that's classified as an asset. That balance is 600 at start. Right, now, if we are paying rent, we have to credit the cash book because it's a payment that's coming out of the cash book, and we're going to debit the expense account. I'm just going to put the total. Right, now if they give you two separate items, please, and they give you sufficient space, please put both items, right? So what else do we have? We have rent paid and rent expense. Now rent expense, that is the income statement figure. It goes on the credit side here because expenses are transferred to the income statement at the end of a period, a financial period, and they are debited to the income statement. All right, that's 12,000. Okay, what are we missing? So first of all, is it in balance? Oh, I've done something bad there. Okay, there we go. All right, so clearly 10,006 is less than that, so our balance needs to be carried down from here. So this was a prepayment, but now it has turned into an accrual. Right, so that's not good. All right. Okay, next. Let's take a look again here. Gargamel was owed 2,500 in commission revenue on 1st January 2015. During the year, an amount of 14,000 was received and deposited into the company's bank account. At the end of the year, there were no amounts outstanding or received in advance. Okay, so what they're telling us is there's no ending balance. We received 14,000 and we were owed 2,500 at the start. So if you were owed 2,500 at the start, they had to pay that. And then they paid 14,000 more, so you received, if you don't have any balance at end, it means you received exactly what you were supposed to get or what you were owed, which means you received, sorry, you earned 16,500. All right, sorry, sometimes talking it out up in the air is a little more difficult because we need to see things, right? We need to see things in order to understand them properly, most of the time. Okay, so first of all, we were owed 2,500 in commission revenue. That's on the debit side here because anytime anybody owes us anything, that's an asset. Assets have debit balances. We received 14,000 during the year, right? So that's the cash book figure, 14,000. It's on the credit side here. Why? Because if you receive any money, it goes on the debit side of the cash book. All right, now, so it means that we've earned some particular amount. Well, I guess I was wrong in my analysis. Was I? I don't know. This is a revenue account, right? Okay, so clearly, first of all, there's no imbalance. All right. Oh, yeah, I was wrong. I said 16,500. No, that's not true. Oh, we received 14,000. Okay, I mixed up the figures. Okay. All right, my bad. 11,500. Right, so let me just redo that analysis so you can't say I've left you with a bad explanation. We were owed 2,500 at start. We received a total of 14,000 and we have no balances outstanding at the end of the year. So this 14,000 cleared off whatever balance was owed at the start and whatever was owed for the current year. So if we take 2,500 from 14, we'll find out how much was owed for the current year, or how much we earned. All right, so very quickly we could do, what's that, commission? Revenue was 11,500. Was that what? What was it? It was rent? Yeah, it was rent. Rent. Okay, cool. Sorry, guys. All right, rent. How much was rent? Income statement 12,000. All right, and balance sheet extract, we have rent on the credit side. That's a current liability. That's accrued expenses. That's 1,400. All right. Okay. So this has been the solution for the 2016 question. Okay. We're going to go on out to Jan 2015. Oh, so it did come 2 years in a row. All right. So before we do Jan 2015, if you need to take a pause, copy down that solution, whatever the case, you can do so. I'm going to clear this out now. All right. So 2015. All right. Quella True Life. An insurance agency earns commissions on policies sold. The firm operates from a building which it rents from citizens' realtors. Quella True Life's accountant, Mary Jane, reports the following information for the period ended 31st December 2014. Okay, so from the following information, prepare T accounts for each of the items. Commissions. Now, they said that they earn commissions, so commissions is a revenue. And rent, well, rent is clearly an expense. So let's deal with the commissions first, shall we? So commissions received paid into bank, 351,600. So that goes on the debit side of bank, so it's going to go on the credit side here, right? So 351,600. Commissions to be collected. That means that's the amount we received and we are still owed. So if it's owed, it's going to be brought down on the debit side, which means that's 28,200 here. And to be brought down on the debit side, you have to be carried down from the credit side, right? 28,200. And we also have commissions received in advance. So that's prepaid revenue, which will be brought down on the credit side. And to be brought down on the credit side, you have to be first carried down from the, whoops. Okay, not sure what's going on there, but all right. All right, and what we're missing is the income statement figure. I was typing it out. I put in those drop down lists so I wouldn't have to spend time typing. But I do like to type, by the way. Anyhow, sorry, I'm rambling. All right, so 28.2. All right, so clearly this account is not going to be in balance. All right, so let's do some, okay, so that's equal to this minus 19,400. Cool. 364. There you go. All right. Lovely. All right. Rent now. Sorry, we did commissions. Now rent expense. So rent expense, rent paid. Rent paid goes on the debit side of the expense account. That is 46650. And then rent owing to landlord. Rent owing will be accrued rent, which is an expense. And in this case, a current liability, which will be brought down on the credit side. But to be brought down on the credit side, you have to first be carried off on the debit side. And we are clearly missing anything on this. Well, obviously, your income statement figure will have to be the full 63,800. Okay, there you go. All right, so add other revenues. We have commissions. Commission revenue, how much is that? 360,400. And rent, that was 63,800. Balance sheet. Okay, so we have a couple items here, boy. I only cater for one at a time. All right, let's see what happens, right? So we have accrued revenue, 28,200. That is those are the commissions to be collected. And then in the current liability section, we're gonna have, first thing we have is, let's do prepaid expenses first. Sorry, accrued expenses. What am I saying? That's 17,150, right? And then what we're gonna do, let's just put that down here. We have prepaid revenue as well, which is the 19,400. Notice how both of those items are on the credit side of their respective accounts. Cool. All right, so let's just check the rest of the question. Oh no, okay, so that question ends right there. So there were no, extracts that you had to do. But once again, I like showing you guys the extra information because you never know what they're gonna ask you for. So you need to be prepared for it. All right, so I think this is going to be the last one I'm going to do, which is the 2010. Anything before that, just a little too far back. I mean, it's not, I'm not saying don't go and do questions from before 2010, right? They are very valuable to practice, provided the content is still in the syllabus. So just be careful to check those things. Even if the content is not in the syllabus, it might just be fun to try it. Although some people say my definition of fun is a bit different than theirs, but we will talk about that another time. All right, so very quickly. Jan 2010. So once again, notice it's a January paper. On examining the company's rent expense account and the commission revenue account for the year ended December 31st, 2009, the following details were revealed. Rent expense. Accrued rent, December 31st to 8. So we notice in a slightly different presentation in terms of the layout of the information. Once again, you have to read. Okay? Accrued rent, December 31st, 2008 $2,500. Now our current year end is December 31st, 09. So this is the opening balance. All right, rent paid by check. We have 2 payments, and then we have prepaid rent at the end. All right, let's deal with that first. Okay, so rent expense. So the balance, it says accrued rent. Accrued expenses are current liabilities because we owe somebody money. That goes on the credit side of the expense account. Rent paid. So rent paid, we're going to just put one figure. Total will be $15,500. Oops, I missed out a 5. And prepaid rent. So prepaid rent is an asset because we've paid in advance for something. So it's going to be brought down on the debit side. To be brought down on the debit side, you have to first be carried down from the credit side. And what's missing is the income statement figure. But what we'll do is we'll just total those up first. All right, so if we have 15,500 on this side and 3,500 here, simple subtraction tells us that we need $12,000 to make it balance. All right, good. Next, the commission revenue account. Commission revenue, accrued commissions, December 31st, 2008, 1,500. All right, that seems simple enough. So that's a balance brought on the debit side. Why? Because accrued means owing. If we are owed revenue, people owe us money, that's an asset. Commissions received by check, Jan 31st, 2000. Okay, so once we have any receipts, they go on the debit side of the cash book and the credit side of the other account, which in this case is revenue. We had 2 amounts of 7,000. 7,000 by 2 is 14,000. Accrued commission. Okay, so it remains accrued, which means it's going to be brought down on this side, which will be 2,500. To be brought down on the debit side means you first have to be carried down from the credit side. And if we total up, so therefore the income statement figure will be $15,000 in balance, right? There you go. Gross profit. So let's do commissions. That was 15,000 that we just found, and then this was rent, was it not? Rent was 12,000. Oh, this wasn't cleared out. Sorry about that. Right. Any balances? Yes, we have current assets. Accrued revenue. It doesn't matter the order in which you put the items, and we have. Whoops. Yeah, sorry, you guys are hearing my dogs. They like to bark when I'm doing things that require them to stay quiet, like teach. Okay, guys. All right, so I'm gonna have to stop this video here because I'm kind of out of time. I have some stuff I have to do, but I just want to say I hope you guys are finding these videos helpful. If you are, please give it a like. Give that subscribe button a click. All right, please feel free to share these videos. Like I said, I like to help people, and I want as many people as possible to benefit, especially if they need the help. Right, you can follow me on Instagram. We also have a Facebook page, and on that Facebook page I have many past paper solutions for POA as well as AdMath. Okay guys, so have a good one, good luck, and I'll see you next time.